Welcome back to Investing Tech Podcast. Today we're embarking on a deep dive into Castellum. It's a company making some, intriguing moves in the cybersecurity and defense space. And the big question, I think, on many of your minds, and what we really want to unpack today is this. Is Castellum a good time to buy now? We've scoured a stack of your sources, recent articles, some in-depth research, expert analyses, basically trying to pull out the most important nuggets of knowledge. The goal is to help you get well-informed quickly and hopefully with some real clarity. Before we jump into the nitty-gritty, if you're finding these deep dives useful for, your investing insights, please do remember to subscribe. Maybe leave us a like or a comment. And if you're feeling particularly generous, consider buying us a coffee to support the show. Your engagement really helps us keep bringing you these analyses. Okay, let's get into it. Let's unpack this. Our mission today, it's not just about giving a simple yes or no. Instead, we want to equip you with the full picture. We'll look at Castellum's core business, its fundamentals, how it's valued in the market, the stock's technical behavior, and, the broader landscape of catalysts and risks. It's really about empowering your own informed decisions.
Yeah, and what's really fascinating here, I think, is that Castellum operates in such a critical sector, cybersecurity and defense. That space just inherently comes with both, immense opportunity and some pretty unique challenges. We'll definitely be looking at all sides of that coin today.
Absolutely. So let's kick things off with the fundamentals. What exactly does Castellum do, and what are its most recent financial results telling us about its trajectory?
Right, so Castellum is deeply involved in providing cybersecurity and defense solutions. And importantly, they've been securing significant federal contracts. Now, here's where it gets really interesting. For the first time since its IPO back in 2022, Castellum actually reported year-over-year organic revenue growth in Q1 2025.
Organic growth, okay.
Yeah, they hit $11.7 million. That's a 3% increase compared to Q1 2024.
Only 3%, but it's growth.
It is. And this early sign of stabilization seems to be primarily driven by these large federal cybersecurity contracts they've won, like the $103 million Navy PMA 290 program.
Wow, $103 million. That's a pretty big deal for a company their size. It's a huge win, yeah.
Okay, so that 3% organic revenue growth, it sounds like a potential turning point, especially with those big federal contracts backing it up. But is that top-line growth translating down to the bottom line yet? Are they actually making money?
That's the key question, isn't it? And it naturally leads us to profitability. Despite that revenue growth, the company is still operating at a net loss.
Still in the red.
Still in the red. Their trailing 12 months net income stands at negative $7.16 million.
Oof.
And that's against about $45.09 million in revenue for the same period. So yeah, it clearly indicates negative profitability. It suggests ongoing investment costs or maybe significant restructuring costs as they try to scale up.
Okay. And what about debt and cash flow? Those are pretty crucial for any company's health, right?
Yeah.
Especially one that looks like it's in a turnaround situation.
Yeah.
Did the sources give us a clear picture there?
Specific debt and cash flow figures weren't readily available in the sources we looked at.
Okay. However, when you combine the negative earnings with a relatively small market cap, $115.88 million? It sort of implies potential leverage or maybe cash burn risks.
Right.
These are pretty common challenges, though, for companies trying to turn the corner, especially in an intensive sector like cybersecurity.
Yeah, that makes sense. So if we pull all of that together, you've got the federal contracts, that first sign of organic growth, but still a net loss, and maybe some debt cash concerns. What does this all mean for their competitive edge and their long-term earnings potential?
Well, their positioning in the cybersecurity and defense sector is certainly a strategic advantage. Securing those large federal contracts really demonstrates that.
Yeah, getting government trust is key.
Exactly. It suggests a significant competitive edge in providing trusted tech solutions to government agencies. That's a high barrier to entry market.
Right.
As for future earnings, analysts seem to be projecting moderate to slow share price appreciation, really long term. And here's a truly striking nugget from the analysis. Average price targets apparently rise from about $0.18 in 2025.
Okay, 18 cents?
Up to around $1.79 by 2050.
Wow, 2050, that's quite a leap over 25 years, from $0.18 to nearly $1.80. That doesn't sound like steady growth. It almost sounds like analysts see it less as a normal growth stock and more like a long-shot call option, maybe, on the future of federal cyber spending.
That's a good way to put it.
It implies a huge amount of speculation, right? Like the big payoff only comes if everything aligns perfectly over a very, very long time. It's almost a generational investment type of outlook.
Precisely. It signals significant uncertainty and a very, very long horizon needed for those bullish returns. It definitely emphasizes the speculative nature of this stock right now.
Okay. So we've got a fairly detailed picture of their internal health, the business itself, and that very long-term outlook. Now let's widen the lens a bit. How is the market actually pricing Castellum compared to its peers? Is it looking like a bargain, or is maybe some of that optimism already baked into the price?
Yeah, good question. If we connect this to the bigger picture, the valuation metrics for Castellum really present a mixed bag. First off, their price-to-earnings ratio, the PE ratio,
Right.
well, it's not applicable because of their negative earnings. You just can't have a PE if you're not profitable.
Makes sense.
And just for comparison, the industry average for cybersecurity often sees PE ratios of, say, 25 to 30, sometimes higher. So that highlights just how far Castellum is from those traditional profitability metrics.
Okay, no PE. But what about other metrics like price to sales? That can sometimes give a clearer picture, especially for a company that's maybe in a growth or turnaround phase.
Right. Their price to sales, or PS ratio, comparing the market cap to total revenue, is approximately 2.57.
2.57, okay.
That's calculated by dividing the market cap by the revenue. Now, while the industry average for PS can vary quite a bit, it's often, 5 to 10 or even higher in tech.
So 2.57 is on the low side.
Yeah, it is quite low, yeah. And that could indicate either undervaluation
Mm-hmm.
or potentially it could raise questions about the quality or sustainability of their revenue. We also didn't find any firm discounted cash flow or DCF valuations in the sources. And interestingly, some existing stock price forecasts actually implied that the intrinsic value might be below the current share price in the short term.
Oh, really?
Yeah, suggesting potential overvaluation right now, despite that low PS.
That is interesting. A low PS could signal a bargain, or like you said, it could be a warning sign. How do we try and distinguish? Is Castellum truly undervalued, or is the market maybe seeing deeper issues, maybe with revenue quality or just the fundamental challenge of competing in this sector?
That's really the core question here, isn't it?
Mm-hmm.
The sources seem to suggest that while the PS is low, you have to factor in the lack of profitability, the small market cap, the long-term nature of those federal contracts.
Right.
It seems the market is likely assigning a lower multiple because of the perceived higher risk and that really extended timeline needed for significant returns. It's probably less about clear undervaluation and more about a combination of that turnaround discount and maybe some caution about government contract revenue predictability.
Okay, that provides some important context for that low PS.
All right, let's pivot again. How has the stock itself been behaving in the market? What are the charts and recent market sentiment telling us about Castellum?
Well, the stock price has largely languished near the $1 mark.
It's stuck around $1.
Pretty much, which is roughly 45% down from its 52-week high. So that indicates a pretty significant correction has already happened. But it also suggests that maybe a baseline support level has formed around that $1 mark.
Okay, potential support. What about moving averages?
Looking at those, the recent 50-day simple moving average, the SMA, is around 99, so right where the price is. And the longer-term 200-day SMA is lower, around $0.67.
67 cents. Yeah. So this means the price is currently above its longer-term average, which is good, but it's basically sitting right on top of its shorter-term average. Suggests maybe a point of decision or consolidation.
So it's hovering around that key support level near the 50-day. What about momentum and volatility? Are investors starting to get interested, maybe pile in, or is it still a pretty choppy ride?
Well, the Relative Strength Index, the RSI, which helps gauge momentum.
Right, overbought, oversold.
Exactly. It's currently at 55.12. That's really right in the middle, indicating pretty neutral momentum and not overbought, just neutral. And volatility over the last 30 days is about 4.79%. That's, I'd say, moderate for a small tech stock like this.
Okay.
So the overall trend recently is kind of sideways to maybe mildly bearish, but importantly, it is showing some signs of potentially bottoming out and maybe starting a recovery. It fits that buy the dip narrative, at least for those who believe in the turnaround story.
Okay. So it sounds like a bit of a mixed bag on the technical front. Signs of bottoming, potential support, but still largely sideways, neutral momentum. Now, what about the latest news? Or just the broader market sentiment surrounding Castellum? Because that can definitely influence things, sometimes more than the charts.
Well, the Q1 2025 earnings we mentioned, that was certainly positive news. It indicated that the revenue turnaround might be starting, And those strategic wins in government contracts are getting recognized.
Okay, good news there.
And we've even seen some strong buy ratings pop up from certain analysts. Some have 12-month price targets as high as $3.
$3 from around $1 now.
Yeah, indicating pretty bullish sentiment among at least a subset of experts.
I sense a but coming.
But yeah, it's crucial to balance that specific bullishness with the overall market sentiment. If you look at something like the Fear and Greed Index, it currently shows fear with a score of 39.
Still fearful territory.
Exactly. That means a generally cautious market sentiment overall, which can certainly weigh on a smaller, more speculative stock like Castellum, regardless of analyst ratings.
Yeah, that's a really fascinating juxtaposition, isn't it? You've got some analysts shouting strong buy with these ambitious price targets like $3,
Right.
yet the broader market is signaling fear, and the stock itself is still kind of stuck sideways or maybe even slightly bearish. How much weight should we really put on those bullish analyst ratings in that context? What's the counterargument maybe that those bullish analysts might be overlooking?
That's a really valid point. The counterargument, I think, lies in the inherent high-risk, high-reward nature of this specific type of investment. Those strong buy ratings, they're likely based on the assumption that Castellum will successfully execute its turnaround plan.
Big assumption.
Huge assumption. That they'll convert more of those federal contracts into consistent profits, that they'll overcome the tough competitive landscape. If that execution falters, or if broader economic conditions worsen, those lofty targets could become very, very difficult to achieve. It really highlights the gap between a potentially exciting long-term vision and the immediate, often harsh market realities.
That makes a lot of sense. Okay, so with all of that in mind, the fundamentals, valuation, technicals, sentiment, what could genuinely move the needle for Castellum, both positively and negatively, looking ahead, say, in the coming months and years? What are the big catalysts and the significant risks we need to watch?
Okay, catalysts first. Obviously, the upcoming quarterly earnings reports will be absolutely key. Investors will be watching closely to see if those growth trends continue, and maybe more importantly, if they can show a clearer path towards profitability.
Gotta see the losses shrink.
Exactly. Beyond earnings, landing further large federal contracts or even just renewals of existing ones could act as significant long-term growth drivers, really bolstering their revenue streams.
Makes sense.
And then there are broader factors. Continued growth in cybersecurity spending globally, maybe increasing regulatory pressures that force organizations to spend more on security. Those could also significantly benefit Castellum's future revenue, almost like a rising tide lifting their boat.
Okay, those are the potential upsides. Now let's talk about the risks, because as we've definitely seen, every investment has them. What are the potential pitfalls an investor needs to be really keenly aware of here?
Right, the risks. Well, company-specific, the primary one is continued losses with still an unclear path to consistent profitability. That's number one.
Still losing money.
Yeah. They also face potentially low liquidity because they are a small-cap company. That $115.88 million market cap means this stock can be more volatile, harder to trade in large quantities. And, of course, there's just the inherent risk in any turnaround situation. Not all turnaround stories actually succeed.
Sure.
Then on the sector-specific front, cybersecurity is just a hugely competitive space. It's dominated by large established incumbents, making it really challenging for smaller players like Castellum to carve out significant market share.
Tough neighborhood.
Very tough. And then you have the macroeconomic factors. Things like defense budgets potentially being affected by political decisions, broader tech sector volatility, which we've seen a lot of, and, of course, interest rate impacts on valuations for growth tech stocks. All those pose significant risks, too.
Right, the bigger picture stuff.
Yeah. And finally, just looking at the stock's history, those significant past price drops and the moderate volatility we talked about, they imply considerable trading risk, especially for potential investors who aren't planning to be in it for the very long haul.
Okay, a pretty comprehensive list of risks there. So after this pretty thorough deep dive, let's bring it back to the core question for our listener. Is Castellum a good time to buy now? What's the overall verdict, kind of synthesizing everything from the sources we've analyzed?
Okay, the synthesis. Based on all the information we've unpacked, the sources collectively seem to give Castellum a rating right around 5 out of 10.
5 out of 10, middle of the road.
Exactly, indicating a moderate risk-reward profile. It clearly shows those early turnaround signs we discussed, but it absolutely remains a loss-making company facing valuation uncertainties and significant competition. So for potential investors considering it, the suggested entry price range that came up in the sources is around $1 to maybe $1.10.
Okay, near that support level.
Right, aiming to capture that current support and maybe the value dip. It's generally advised to avoid buying much above, say, $1.20, as
Yeah.
that might be seen as chasing short-term speculation rather than focusing on the longer-term potential value.
Okay, so if someone does decide to dip a toe in, aim for that $1 to $1.10 range. Now, for what kind of investor is this most suitable? Who should maybe be looking at Castellum and who should probably steer clear?
Good question. Castellum appears more suitable as a long-term speculative investment.
Emphasis on speculative.
Definitely emphasis on speculative. It's for investors targeting that gradual growth that might stem from government contracts and the general overarching demand in cybersecurity over many years. The sources explicitly note it's probably not ideal for short-term trading because of that sideways trading pattern we saw and the inherent
Oh,
volatility.
right, not a quick flip.
Not a quick flip. Now, for traders who might still consider it, maybe on a technical breakout, a stop loss near 90 cents is suggested to protect against a breakdown below that support. And maybe a take profit target near $1.30 to $1.50, but only if the technicals really turn strongly bullish and confirm a solid upward trend.
Okay, very specific parameters there.
Yeah. So in summary, while Castellum shows some early promising fundamental improvements after a tough period, largely supported by those strong federal contracts, it absolutely remains a speculative and risky proposition overall. Its loss-making status, the uncertain near-term valuation, those moderate technical signals, it all means it might be attractive for very patient investors who really believe in the long-term growth story of the cybersecurity sector, and specifically in this company's turnaround plan. But short-term traders should definitely proceed with significant caution.
You know, what's really fascinating here, thinking about it, is how a company's story like this, especially one in a turnaround phase, truly requires us to look way beyond just the
I
headlines.
love it.
You really have to dig into all those layers, the fundamentals, the valuation, the market behavior. It's just such a powerful reminder that every single investment decision is ultimately about balancing that exciting potential reward with some very real, very tangible risks.
Well said.
So, as you, or our listener, reflect on this deep dive into Castellum, maybe consider this. How do you personally weigh that promise of long term, maybe high growth potential in a really vital sector like cybersecurity against the immediate realities of, well, profitability struggles and ongoing market volatility? And what does that balancing act tell you about your own personal risk tolerance when it comes to these kinds of speculative opportunities? Thank you so much for joining us for this deep dive. We really hope this has given you a clearer, more informed perspective on Castellum. We'll be back soon with another deep dive into your most pressing questions. Until then, keep learning and stay curious.